Well, thank you so much for staying with us. It is still iBrand Daybreak on iBrandTV. And of course, it's time to talk personal finance. And we will be talking about financial planning. What is its importance and how do you even go about it? You will be learning all of that. And we have the pro in the studio. We have Charles Fakroha. He is a stockbroker and business analyst. Thank you so much for joining us today.
Thank you. You look great.
Good morning.
Thank you.
Samson, what happened?
We got the memo.
You got the memo.
I see the connivance.
It's a bright Monday morning.
Yeah.
And I could see that, there is a lot of happiness around.
Energy.
Yes, energy. and that's good. So that takes us to what we are here today.
Yes.
That is okay, this is a segment for personal finance. Okay. Yes.
Honestly, you can't answer the comment.
No, because it's a serious issue. Okay. And I've gotten a lot of feedbacks. People are saying, they are even challenging me, even invite me to come and talk to them and prove that these things that we talk here is, practical. And I said most of the things we have discussed here are practical and you can implement them. And that's why today we are looking at what's a financial plan.
Okay.
Yes, because they said those who fail to plan have already planned to fail. So what is a financial plan? How do I write a financial plan? What are the components of a financial plan? What is even the purpose of this financial plan? So I'm sure if we're able to answer that today, maybe we'll have been able to, interrogate those persons that are saying these things are just theory. But I tell you they are not theory. A financial plan is simply a document that, captures your present financial situation.
Okay.
Your financial goals, and of course, the strategy to achieve those goals. That's it. This plan can be done yourself alone, or couples can come together and do it together. They can also require the service of a certified financial planner or any financial professional who has specialty in this area. But you can do it yourself. And people are saying it's very difficult. Yes, I agree with them, it's difficult. But you see, all tasks are difficult before they become easy. Look at the time you start to learn how to, for me, I know it took me a long time to ride a car or drive a car.
Okay.
When you started that training, that learner as they call it then.
It looked impossible.
It looked impossible. They will abuse you. You are driving, you see a big truck coming, you'll be shaking, you'll be sweating and all that.
Especially if you learn with manual.
Yes, exactly. It is now that most vehicles are, automatic. But after a time, you don't even think about it. You don't know when you are even closing down. You don't know when you are, and everything. But when you started, does it mean that tax has reduced? No. But your expertise, unconsciously, you are just doing without even thinking. The same applies to doing this financial plan. Okay. Initially, when you start, it will take you it will be difficult. But we are saying, do not give up.
So let's talk about the steps to having a financial plan.
Yes. Now, one, you first of all have to identify your financial situation at the moment. Yes.
Even if it's the SACPA level.
Yes. At the day, you need to know where you are, your current situation. You know that. Then you now ask yourself, where do you want to be in future?
Okay. Quickly, just to ensure that our viewers are catching up with all we're discussing.
Yes.
When you say your current situation financially, that require the debit, the liabilities, income generation, or
exactly. I was going to that. Yes,
okay.
I was going to that. That is, you need to calculate what they call your net worth.
Okay.
And your net worth is just simply your assets. You list all your assets that you have. Then your liabilities. Your asset is what you own. Your liabilities are what you owe. Now, your net worth is a simple arithmetic. You just say total assets minus total liability. That gives you your net worth that moment. And as you know, as you keep increasing in your profession, your age, your experience, your net worth tends to also increase or decrease, as the case may be. Now, once you do that, the next step is for you to understand your cash flow.
Okay. What's that?
You need to know the amount of money that comes in to you and how the money goes out.
Okay.
For some person, it might take a year preparing all this. Yes, because you need to know. Now, but I advise that you can even.
Why would it have to take so long?
You know, you want to, what's your current situation? You need to want to go back and see expenses you have made, you know, in terms of knowing where the money has gone and the income you have gotten. You know, that will take a lot of time. But I'm saying for you to know what you have spent, what has gone out, you can even use a week. You start on a Monday morning. Every expenses, you keep recording it. By the time you record this for 5-7 days, you do it the next week. In a month, you have an idea of how much that goes out in that month, and you can estimate and say, okay, if this is what goes out in a month, in 12 months, that is, you can understand now your yearly outflow. And you can also see the categories of your expenses. At the same time, you're also tracking your income, because your income might not be only your salary. You could get other incomes, you know, people could just gift you something, you know. Then you now know that, okay, this is what comes in and this is what goes out. Now, if you now see that on a particular item, you are spending so much, that will make you now reduce it. So all this is just to give you an overview of your cash flow. Now, once you have done that now, then what are the components of this plan now? We started discussing some of them. Your income plan. If you don't discover that, man, I need to increase my income from the cash flow you have seen, and your income is not bringing enough, then the next step is to see how you can increase that income. Some people have said side hustles. You can begin to think of things you can do.
Multiple streams of
income. Multiple streams of income. Then the next one is your cash flow plan.
Okay.
Your cash flow plan is just simply knowing what comes in and what goes out. Then your expenses, there are categories. You need to differentiate between what is your want and what is your needs. It is very, very, because you can reduce expenses based on your wants. Your needs are something that you really require.
That's where opportunity cost comes in.
Yes. So all those wants, you can do without them. I'm not saying all of them, but there are some wants you can.
Basic.
Can we get practical?
You might say, okay, do I need a new pairs of shoes? The ones I have, I can still make use of it. They're still looking good, even though new ones have come out. This dress, I just bought it not quite long ago. I can still make use of it. You know, these treats I used to go every weekend. Do I really need it? These are not essential things. So you could cut down on your wants. But for those essential things, your feeding, transportation, utility bill, these are essential. Things that are essential that you don't have a choice. You have to pay them. Okay. Now, once you have done that, then you can now say, okay, you have gotten your income plan, cash flow plan. The next stage, you know, if a financial plan is made up of different plans, there are 7 of them: income plan, cash flow plan. Then you have what we call the savings and investment plan. You also have your risks or insurance plan. Okay. You also have your tax management plan. Okay. You also have your estate plan, which is always very key. Then, of course, your retirement plan. So all these now make up that your financial plan. And like I said, you can do it alone, or you can get the services of a financial plan.
Because I was going to say, all of these components require some level of expertise. For instance, the retirement plan, you need some level of expertise.
Yes, but you already know that, these plans must be there. That's why you need an expert. But some persons, they know what, you already have your goal. I want to live comfortably during my retirement. All of us have that goal. Is that also? Or is there any person who wants to say, the standard of living, I want it to drop when I retire? No, we want to at least maintain that standard. You already have that. Now, what do you do next? If your company has a retirement plan for you, or this pension according to the Pension Reform Act of 2014, yes, if you are contributing 10%, you can increase, because it's expected that you contribute, your employer contribute, and they remit to the relevant pension fund administrator. So you can say, okay, for me to achieve this my retirement goal of living comfortably, you know, maintaining the same house I'm staying, I I need to increase my retirement savings. So you can say, no, that 10%, you can do maybe 12%.
But would that reduce the contribution of your employer?
No, it doesn't.
Okay.
That's minimum.
Okay.
Your employer can even do more, depending on how bad that is. A basic minimum, I think it's about 10% from the employer, I think about 10% from you. So you can also increase.
This may not be related, but we've seen cases where employers withdraw or take out that part of their pension, deducts rather, and then they do not remit it to the right quarters.
Yes, there is a regulator, that's the National Pension Commission. And if you have issues like that, you can go and complain. Yes, I've seen cases. Like I have also done it personally too. You go, first of all, you go to your pension fund administrator, they will give you your account, and they will tell you so and so remittance did not get here. So they even give you the statement. So you can now go to PenCon office and complain. Of course, they will write to that employer and ensure that because in fact, those money that are supposed to be in your retirement savings and your RSA, if it delays in coming to that your account, then that employer is even expected to pay an interest for that delay of that money.
Wow.
Yes, the law is clear about it. The law is clear.
So a lot of people go through some, things we don't need to go through because we don't know the right thing to do.
Of course, that's it. So, and that's why we are using this medium to say, yes, today is Monday. We need to increase wealth. We need to make people happy. Because I keep saying, happy employees are assets to any company because they will give their best. Productivity will become creative. But if they are financially stressed, they will also stress the bottom line of that company. It's as simple as that. Yes.
So you've talked about, go ahead.
Sure, before I go.
You've talked about the steps to go through to write a financial plan. What other things does one need to look into to have a financial plan?
Yes. Once you have done all those calculations, like I said, they are not easy. You do it alone, or you can get the advice of a financial planner. That is done. Then you need to begin to implement that plan. Because like any other plan, it's as good, if it's not implemented, it's as good as just the paper in which you have written the plan. But today, we know most of us are digital. You will have that your plan, online. Digital, soft copies. While some persons might have it written out, but I advise maybe soft copies so that you can see it, and know that and monitor it. This is your financial plan. But you now ask yourself, so what is it? Why am I doing this plan? Why? What is the purpose of this plan that I'm doing? One, you want to make money your servant. You want money to work for you. Because when you see it on paper, you see it on ground, then you will know where your money is going to. And because you have set goals already for yourself, then the tendency for you to work towards that goals is there. Because we have said, what are goals? Or what are obstacles? Obstacles is when you remove your goals. You see obstacle. But when you put your goals there, even if there are obstacles, but because of your needs to achieve those goals, then no matter what it takes, you will do what you need to do to achieve those goals. Because you look at yourself, if you keep spending money, ask yourself whether you like it or not. A time will come, your revenue, your income will go down. A time will come, you want to run, you can't run. A time will come where you have worked before, you retired, you want to come there. The people working there will say, this guy has come to disturb us. And no matter how good you are in any organization, a time will come, they will tell you, bye, bye. And you will go. So we're not saying as you are living, you must have a plan before you leave. And your financial plan is one of those plans that you need to take seriously. Another purpose of you having this plan again is to make you become financially free, financially independent. That is, you don't even need to disturb anybody. And on your own, you can decide to support a grandchild or your adult children on your own, because you must have done all your responsibility for those your children first of all. So if you decide to support their own kids, they'll be grateful, or even support them, and not you becoming a burden,
liability
to them. You know, when we discussed retirement planning here, we said it's a myth. If you want to depend on your children, that's the reality is what we see today. The children don't have your time. So you must be ready and say, I am the one, not even your employer or the government or the economy. You are the one that will take care of yourself in retirement. So those are some of the purposes. Now, what is the component of a successful financial planning? That is, let's say you have done the plan, you have implemented. What will be those components now? Freedom for you. Yes. Freedom to travel where you want to travel to. Freedom to get whatever you want to get because you have made the plan and everything that you need. You are living in your own comfortable home. Yes. No landlord will come and disturb you. The day you decide to come out is just because you just want to move. Nobody is forcing you. You want to get the latest sports news even as an elderly person. And I'm saying you can achieve this even before you are 55. It's possible.
Interesting
Yes.
points you've made here.
Yes.
But let's look at some of the obstacles that stand in the way of you having a financial plan and how to overcome them.
Yes, there is a lot of obstacle. I agree with you. Like everything in life, there is obstacle. But you have to be steadfast, and I'll tell you what to do. One, you have set your financial goals. Two, you need to save habitually. That savings habit is key. Three, you need to invest habitually. Four, you write down and keep your expenses. You track your expenses. This is habits. But there are times where it will be difficult for you to save. Don't be discouraged. We are humans. The mere fact that you fail in one particular assignment is not the number of times you fail. The number of times you're able to
Pick
stand
yourself
up
back up.
and you move. You say, okay, I set a target for myself. I want to save so amount within this period. And at the end of that period, you're just able to save 70%. Pat yourself at the back. You have done something. Don't feel discouraged. Because, like I said, there is no plan that is 100% perfect. But your ability to keep moving. Another thing again that you will need to do, give back.
How do you mean?
How do you mean?
Give back to the society. You don't have to be a Dangote or a Tony Elimelu for you to give back or Todela to give back. Once you know within yourself, you are satisfied. You get all what you need to get, all your needs are met. That is nothing stopping you from contributing to any charity that you believe in their cause, because you will be saving somebody's life.
All right, on that encouraging note, we'll just have to wrap it up. Thank you so much for your time, as always. Charles Fakroha, business analyst and
Let's close with a quote.
We really do not have time on our hands. We'll probably take the quote at the end of the show. But thank you so much for your time. We'll take a break now. When we come back, we'll delve into sports. Please stay with us.